account manager setup, investors deposit their funds with a regulated brokerage that adheres to strict rules, such that only the rightful owner of the account can withdraw from the account. This means that ForexBriefcase merely trades for you through a contractual agreement. ForexBriefcase does not have the rights to make any withdrawals. Now you can earn a passive income, having ForexBriefcase trade for you while you enjoy the flexibility and security of holding the funds under your own name. Contact us to find out more.
Got me running. Shake it, shake it, baby. Raise your hands up. Raise them out.
All right. Hi, everyone, and welcome to another episode of the Daily Currency Call with Forex Trading Asia. So happy new trading week as well to everyone, and thanks for everyone that participates in the chat. We really do appreciate it. So just a quick introduction as well to the new comers to the call. This is episode 388, and it's the 4th of October, 2021. And a quick rundown of what the currency call is. So we do this call from Monday to Friday, and the currencies we analyze are as follows. So on Monday, it is Aussie and Kiwi. Tuesday, the Euro pairs. Wednesday, pound pairs. Thursday, yen and gold. And then Fridays, we do CAD and crypto. Bitcoin and Ethereum is in particular in focus with Daniel. So this is the currency call where you will get market economic updates, key support and resistance levels, trade ideas, and of course, much more. And this currency call is going to be very beneficial to both the long-term investors and the short-term traders. And here we will go through what could move prices, possible trade ideas, and we'll also highlight potential targets and also risks. A quick disclaimer as well, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. All right, guys. So just to start off with, we do have a fresh week, and we also have Kim Hong, not a trade idea today. He'll be going through the RBA. We do have the RBA rate decision, and we've also got the RBA rate statement tomorrow. And he'll just be going into detail about what to expect from that, and also any potential trade ideas as well. And we do have the Aussie and Kiwi in focus today as well. But over to you now, Kim Hong.
All right, thank you, Scott. Happy Monday, everyone. New month, and we will be looking forward to a new series of central banks meetings. Okay, so starting off with the Reserve Bank of Australia. Okay, before that, previously, okay, what did they actually do, right? So they actually carried out a QE tapering, okay, a dovish one, all right? So they tapered QE from 5 billion Australian dollars a week to 4 billion Australian dollars a week, okay? Supposed to be a good thing, right? However, they actually decide to extend this round of QE, okay, from the initial 2 months to 5 months, all right? So they were supposed to actually sort of like carry out a revision, okay, on whether further tapering is deemed fit when it comes to early November next month. However, because of the whole spike in cases again, Delta variant cases in Australia, which led to more lockdowns across the country. They decided to actually extend this this current round of QE, okay, to February 2022. Okay, so by then they will have a clearer idea, okay, clearer picture of whether or not they should continue to taper it down to 3 or maybe lower, okay, or to hold it unchanged. All right, so that was what being carried out last meeting. Okay, what should we be expecting for this time around? Personally, expect no change in QE. All right, because there's as mentioned already, they will be holding it unchanged to February 2022. All right, of course, the extreme may happen. All right, but it's very, very unlikely. Extreme meaning they may come in and say there is a further need to bring QE higher, okay, but unlikely going to be the case, okay, like what Governor Low has mentioned previously, and probably several times already, okay, that at the moment, QE, or rather should I say monetary policy, is unlikely going to have a big impact on the economic recovery in Australia, okay, as opposed to fiscal policy, okay, which can actually do more than monetary policy. All right, so QE wise, no change. Interest rates, it's more likely that it's not going to be, there's not going to be any change. All right, however, I would like to bring your attention to this. So this, what you're looking at right now, is a speech given by Governor Low back in September 14. Okay, so the main point of this speech over here is, let me just scroll all the way down. Bonds. Okay. The main takeaway for this speech, okay, is this. Governor Low, he can't really understand why the market is pricing in an interest rate hike, okay, before 2024. All right. So this is the part here. I find it difficult to understand why rate rises are being priced in next year or early 2023. Okay, so I'm not going to go through the whole speech, all right, but the main thing over here is this, all right. So he has a speech, and then when it comes to the discussion of monetary policy, all right, he mentioned that wait, let me look for the section over here. Okay, so he mentioned that inflation, all right, inflation in Australia is actually a key factor, all right. So I think it was since last year, yeah, I think it was late last year, that the central bank, RBA, actually mentioned that, you know what, actual inflation rate is much more important than forecast inflation, okay. So the main reason he gives is the central bank committee members, okay, do not want to run the risk that, they increase interest rate based on the fact that the forecast has been good, right, has been strong, only to face that, only to lead to the scenario that it did not come to pass, all right, meaning the actual inflation did not actually go as projected, go as forecasted, right? So it will be too late to revert everything, and even if they were to do so, it will create a mess in the market, all right? So actual inflation is what they are more concerned about, okay? But all right, actual inflation, when will this whole actual inflation be the target, the 2 to 3% central bank's target range will be met, all right? So according to Low, and of course the whole central bank, it's unlikely that it will be met before 2024, okay? So if the central bank requires inflation to be within the 2 to 3% target range sustainably, okay, and they don't expect this condition to be met before 2024, then it is unlikely, okay, unless there's a change in policy, all right, there's a revamp in their monetary policy or mandate and things like that, right? Otherwise, it is unlikely that we will be seeing an interest rate from the RBA before 2024, all right? However, okay, market is actually pricing in, okay, interest rate hike before 2024, you know, like 2022 and 2023, all right? So, okay, as you can see over here, there's this chart. This yellow line is actually the implied cash rate, okay, which is the market's expectation of where the Australian interest rates will be, okay, across the next few years, all right? This is just the market's expectation, all right, a projection sort of. So as you can see, by the end of 2022, over here, there is a expectation that interest rate will be 0.25, okay? So, and of course, you know, when you go to 2023 and 2024, you will see interest rate rise higher, all right? So the thing is, why is it that the central bank, the RBA, is not expecting an interest rate hike? Well, because inflation is unlikely going to hit the 2 to 3% target by then, right? So why is that the case? Why is it that inflation is unlikely going to be at the level? So over here, Governor Low actually mentioned that meeting this condition, the condition of a 2 to 3% inflation target range sustainably, okay? Meeting this condition will require a tighter labor market than we have now, okay? So specifically, they want wages to be growing by at least 3%, all right? And at the moment, Australia wages is actually way below 3%, okay? It's growing, but it's growing at a rate way below 3%, all right? So as you can see at this graph 10 wage price index growth, okay, you can see private sector on the left, public sector on the right. Now, private sector being the higher one, we can see that it's just, I think it's 1.7, yeah. So latest reading of the wage price index, we showed an increase of 1.7 over the year to the June quarter, with wages growth slower than this in the public sector. So it's only, you know, the higher one is only at 1.7%. It's way below the 3% target, all right? So, you know, unless wages were to grow at a 3% level, at least for a period of time, otherwise, it is unlikely that inflation in Australia will hit the 2 to 3% sustainably, okay, meaning for a period of time. So that's what the RBA, okay, specifically Governor Low, is trying to highlight over here, all right? So because of all this whole low wage, which leads to low inflation, okay, it is unlikely that the central bank, RBA, is going to be increasing interest rates prior to 2024, right? Which is why, you know, Governor Low finds it difficult to understand why this whole market pricing in an interest rate in 2022 and even in 2023 is going on. Okay, why is this happening, right? So with that, you know, tomorrow's RBA, we are unlikely going to see any actions being carried out, all right? That is the likely scenario. That's what's going to happen likely, all right? So how will this actually have an impact on the Australian dollar? Personally, okay, I feel that the Australian dollar is likely going to be, it's going to remain weak for the time being, especially against the US dollar, all right? Because with the whole, you know, bond yields, treasury yields, okay, specifically treasury yields rising, leading to a boost in the US dollar, okay? And of course, with the whole upcoming FOMC meeting in November, which the market consensus, the general consensus is that the Fed will actually be announcing a tapering, making an announcement on tapering, QE tapering, all right? So with that, you know, I'm actually expecting US dollar to be stronger than the Australian dollar at the moment, all right? So will tomorrow's meeting actually have an impact on the move of Australian dollar? Well, personally, I don't think it's going to move a lot, all right? But my expectation is that the Australian dollar will continue to weaken, at least for the time being, against the US dollar and the yen, and possibly with the francs as well, okay? Because as you know, the three currencies, dollar, yen and francs, they are all safe haven currencies. Okay, and with this gloomy outlook coming from the central bank, and of course COVID containment in Australia for the past couple to 4 weeks, okay, has not been very efficient. All right. In fact, there's been news that says that COVID cases has already spread to other states as well, okay, which is very unfortunate. All right. So with all this uncertainty and things like that, you know, it is understandable that why the RBA during their previous meeting, you know, they decided to do I would say a hedge, you know, a hedge in terms of their QE. Okay. So by extending the current round of QE by 3 months, okay, until February 2022, they can actually adopt a sit and, you know, a watch and see, okay, watch and see approach, and see how, you know, and determine how the whole containment of the virus were to progress before making further, you know, decisions on whether or not a tapering is warranted. Okay, so for the time being, yeah, expect a weakening in the Australian dollar, especially against the safe haven currencies. Now, if you guys are trading the crosses, you know, the minors, you know, Australian dollar versus, say, for example, pound versus Aussie or Kiwi Aussie and things like that, you know, just pay attention to what's coming up. You know, like if you're trading Aussie Kiwi, okay, there's the RBNZ coming up on Wednesday. Okay, so yeah, that's all I have to share with you guys right now. I'll update you guys again tomorrow. Is it tomorrow? Okay, on Wednesday, actually. Yeah, on Wednesday, on what will go down for the Australian RBA meeting.
So while we have you here, the $1 million question, do you think the RBNZ is going to increase rates?
I'm sorry?
Do you think the Reserve Bank of New Zealand will increase rates this week?
Oh man, I should be covering this tomorrow. Okay, but like what Jin always say, I will give you guys a bonus. Okay, so for you guys who actually are in the currency call right now, yeah, I'll just share with you a little bit. Personally, I feel that yes, they will be hiking interest rate. The Reserve Bank of New Zealand will be hiking interest rate on Wednesday during their monetary policy meeting. Now, the main question is by how much? Is it going to be a 0.25% as initially expected by the market? Or is it going to be a 0.5% as mentioned by Assistant Governor Hawkesby, you know, during his most recent speech, okay? I'm going to talk about it more tomorrow, but for now, I'm just going to say I'm more inclined towards 0.25%, all right? That's what I'm going to say. Come back tomorrow and I'll talk more about it, all right?
You don't think they're going to disappoint the market and not do a hike?
Unlikely, okay? In fact, even if they were to do okay, I'm talking a bit too much right now, but yeah. In fact, if they were to actually carry out a 0.25% rate hike, that may actually be a slight disappointment to the market, okay?
A dovish hike?
A dovish hike, exactly. You know, just like what the RBA did, dovish dovish tapering. You know, right now we may actually be seeing a dovish hike.
Would you rule out a non-action from the RBNZ?
You mean to hold interest rate unchanged at 0.25%?
Yeah.
Oh my goodness. Okay. I wouldn't rule out that possibility. All right. But if that were to happen, yeah, it's likely that the New Zealand dollar is going to, you know, receive quite a big hit from, you know, the inaction by the Reserve Bank of New Zealand.
Even with a dovish hike, we're going to see some downside as well, don't you think?
Exactly. Yeah, that's likely going to be what we'll be seeing if a dovish hike were to be carried out.
All right, cool.
All right, I'll leave the rest for tomorrow. Otherwise, you know, it's going to be a spoiler. You know, people who will be joining it tomorrow will be like, wait, what about the RBNZ outlook, right? Okay, with that, I'll hand it back to Scott.
All right, thanks for that, Kim Hong, as well. And just also, guys, I'll share the link here now. And something that's a nice way to start the week is as well. The team go through what happened last week in regards to economic news. And it's definitely something worth checking out. That link there just goes through, you know, the top points in regards to, you know, what went on and why it was important in regards to economic news in regards to, we've got Jerome Powell and what he said last week. central bank talking points and also why the US dollar strengthened as well. And I'll just quickly just touch upon the US dollar index here as well, just using Sam Trade here. Weekly time frame, just to give a bit of context to what happened last week as well. We did actually, move beyond 94.50. There was a pullback on Friday, and I'll go to the 4-hour time frame now, and I'll zoom in a little bit. And there was a little bit going on. So it was pretty timely. We saw a pullback in the US dollar, and it had really moved pretty strongly with everything that's going on with the uncertainty about, working out what's going to happen with US Congress with their debate over the debt ceiling and things like that. And we did see the US dollar squeeze, higher with inflation concerns persisting. But there was an announcement from Merck about a COVID drug. It was in pill form, and the market really took that, and we shifted back to risk on. So that was it's never a dull moment with FX, but that certainly was something that really the market liked to see. So for this week, really, it's more end of the week is going to be very interesting with the non-farm payrolls. I'll quickly just touch upon that as well, just with the economic calendar, thanks to Forex Trading Asia. So for today, there's not really a lot on. Last week's Friday currency call, Gim Hong went through what to expect from the OPEC Plus meeting as well. I'll share that link as well shortly. And then really for the US, there is a little bit of news out tomorrow night. So this is in GMT +8 time. We've got the ISM non-manufacturing PMIs. And as I said, so if we go down to the end of the week, this is really going to be what the Federal Reserve will be looking at is the non-farm payrolls. So 460K is expected, 235K was last month. So if we do get around the 460 or even a little bit more, it's the tapering situation. And they've already talked about November. They want to see a solid number here. So that could really help propel the US dollar higher. So, even if we hold around 94, I still see that and it's stable. The catalyst is going to be that Friday night, 8:30 GMT +8 announcement. So we are quite extended, and there are some good trading opportunities with, especially the Kiwi is very interesting. And also the Aussie has been trying its best to move higher, but like Gim Hong mentioned, it's, more down is probably the way to go. But really with that, we do have Jin here just to go through the Aussie and the Kiwi. And I would say, this week is particularly interesting for both of those pairs as well. And I think make sure you watch the replay of this currency call as well. I'll share the YouTube link as well, because it's good to be aware of, what's coming up and how to plan for it. So with that, I'll send Jin in and enjoy, everyone.
Thanks for that, Scott. So before I get started into the the Aussie and the Kiwi dollar analysis, quick reminder for all Traders Club members out there, and if you're not a Traders Club member already, the link should be going up shortly. Guys, can you put up the link for me? Running a session tonight. I'll be running a session tonight to guide you through your trades, help you along your trading journey. So if you haven't already, make sure you jump on board. Those who are not a Traders Club members, you get a 1-month free trial anyway. So make sure you sign up and get on board. With that said, looking into the Aussie dollar and the Kiwi dollar, I see a question about OPEC meeting from last week. I'll get, pretty sure Gim Hong will touch on that probably tomorrow. So we'll get back to that on your question. Looking at the Aussie and the Kiwi dollar here, again, Forex Trading Asia economic calendar. Nothing much happening today. The Chinese is on holiday. China is on holiday for the week. Main things to pay attention to, especially for the Aussie and the Kiwi, is the retail sales number from Australia. Looking like it's not going to be fantastic. And as Kim Hong has gone into a lot of detail, the rate decision and the rate statement, at this point, the view that we have is that there's not going to be a change in rates. And the statement, probably no real direction, but the market is probably going to gather some dovishness, going to gather some weakness for the Aussie dollar from this news tomorrow at 11:30 GMT plus 8. Following on from that, actually my attention shifts towards, we got some news for the US ISM non-manufacturing PMI well into that expansionary phase at about 60. Not too concerned about that. The main thing that I'm focused on is the RBNZ interest rate decision. Hence my question to Kim Hong there. It was 0.25%. Interest rate in New Zealand is currently 0.25%. They're expecting it to go to a 0.5. So they're expecting a 0.25% increase, right? So Kim Hong thinks that they might even go to a 0.75, a 50 basis point increase. So we're looking at anywhere from a 0.5 to a 0.75 interest rate for New Zealand. One thing you want to pay attention to is in August, they were also expecting, so it was a 0.25. They were expecting that height at 0.5, but then it didn't change. So that's why the question, are we probably anticipating maybe a no action from the RBNZ? At this point, the analysis looks like they will probably do an increase. It's just the size of the increase, but also this might be the point where it's tricky. The increase is probably going to be something that they hike and say that's it, or they hike to possibly look into giving themselves a bit more tools or weapons into the future to manage the speed of the economy. So with that, it might look like a bit of a dovish hike. I'll tell you more about what it means on a dovish hike when we look into the charts slightly later. From there on, we do have the ADP non-farm payrolls on Wednesday. Again, you can see here, as Scott was telling you about the non-farm payrolls. On Friday, this is the private number, looking like a good increase from 374K to a 430. So market pretty much, or analysts pretty much expecting a good number from non-farm payrolls. On Thursday, we do have more data to be released. I'm not too concerned about the initial jobless claims here because that's a weekly number. And then on Friday, big news is there. First Friday of the month, 8th of October, we do have the US non-farm payrolls was 235, expected 460, looking like a very good number for the non-farm payrolls here. And unemployment rate for the US looking to drop from a 5.2 to a 5.1, so looking like an improvement here. Seems like a lot of good news, seems like a lot of good data for the US to be released at this point. Average hourly earnings dropping a little bit from a 0.6 to a 0.4%. But what you will notice is that, as Scott was sharing with you on the dollar index, jumping to dollar index first, is that it is sitting at this 94 level. It seems to be quite a good base at 94. Late last week, we saw it test 94.50 and got retraced back down. At this point, I think that we might see it consolidate a little bit over the next couple of days before a possible break upwards as we see the possible good news coming from the US, the good data coming from the US, pushing the dollar index up towards the 94.50 and possibly higher. So that's what Scott was just sharing with you. Putting all that together, interpreting all that, what it means on the Aussie US on the H4 time frame here, my anticipation is that we're going to see it move downwards. We're going to see it track lower back towards that 92.33 level. But I'm not going to be looking to trade this move. I'm looking for it to break below 92.33 and look for that selling opportunity towards 71.20. So what you're looking for here is maybe about 72.17. You're looking at a 30-40 pip stop loss for a good 80 pip take profit level. You're looking at a 1:2 risk reward ratio towards the downside. But this would also mean that you have to wait for it to drop. You have to wait for that 40 pip move downwards, break that 72.33 level before selling towards that 1:2 risk reward ratio. Following on from that, looking at a Kiwi dollar. Kiwi dollar is sitting right in that middle range at 69.33. 69.33. At this point, I think that with the news from the RBNZ to be released midweek, we're possibly going to see this not drop as much. We're going to see this sit across a little bit more. Right, I'll move this a little bit so it's easier to see. Oops. We're going to see it sit across a little bit more before possibly increasing by 0.25. I don't think you'll hit a 50 basis point, either a 0.25 or no action. And from that, we're going to see that weakness drop the New Zealand dollar towards that 68.19 level. So what I'm looking for here is selling opportunities below that 69 level. So below 69, I'll look to sell out of a 40 pip stop loss for a good 80 pip take profit level towards that 68.19 support level. Again, quite a simple 1:2 risk reward ratio towards the downside. What you notice here is also that I've been talking about the New Zealand dollar towards the downside, the Aussie dollar towards the downside. What happens if it doesn't move down? If instead of tracking lower, it does bounce up, I would not be looking to trade it up at this point. Same with the Aussie dollar. I would not be looking to trade it up at this point for several reasons. One being that significant downtrend we've already seen on the Aussie dollar and also on the Kiwi dollar, and also with the potentially good news coming from the US later into the week. If it does trade upwards, we could see that reverse happen very quickly. So I'll be very careful, not trade it upwards, but I'll be looking for selling opportunities. If it doesn't drop immediately, maybe selling opportunities towards that 7073 resistance if it does track upwards. So Aussie and Kiwi, I'm still looking for selling opportunities over and over and over again. With that said, I'll pass it back to you, Scott.
All right, thanks for that, Jen. And I have shared the trade ideas as well, just in the chat here, guys, for the viewers' reference as well. Now, I've shared also, for anyone looking to find out what was mentioned with Kim Hong's analysis on the OPEC Plus meeting, I've shared the YouTube link. Now, in that video itself, you go from minute 11:30 to minute 15:40. So I've got a timestamp there as well to check out when exactly it was mentioned and what to expect from that as well for anyone that's looking to trade around that event. I've got the LCMS Traders Club YouTube channel as well for all content. Everything's free there. And also there is the link as well for the Traders Club. Now, we also have got running, and I'll share this link now, is for on the website here, Jin and team have kindly given a 1 month free access as well to the Traders Club. And it's especially relevant right now. We've got our Monday night live trade call as well to get everyone prepared. Now, normally Daniel would go through what's happening here. I mean, Jim, what are your thoughts? Do you want to discuss a little bit about the Traders Club, or do you want me just to run through the Traders Club and you could take what's the live trading call going to be about for tonight?
No. Put up the link again. Just, anyone who's not on already, jump on it. It's a 1 month free trial. If you're on it already, then see you tonight during the call. Straightforward. There's no risk, no harm, no foul. Jump on, get on. That's
right. We've got a lot of participants. We nearly got to 40 today as well, everyone. So if you've got someone that's, been watching what you're doing, share the link, and it's that last link there, and get them involved. And it's a great way to start the trading week as well. But that's it, guys, for the call for today, for Monday, and hope to see everyone, and maybe a guest appearance for the Euro analysis as well. We'll see. All right. But thanks for watching, guys, and have a great day. We'll see everyone tonight for the live trading call.